Hello from the Dugascopy TV studio in Geneva. For our technical analysis, we are again joined by Bruno Estier. Bruno, welcome to the studio.
Good morning, Daniel.
So the equity uptrend seems to be a little bit at a halt right now. Do you think that this uptrend is in danger?
Well, let's look at first the daily charts of the S&P. Of course, yesterday was a big down day. And we already retraced something like two-thirds or 62% of the rise in February. And the daily oscillator, the momentum is already in oversold area. So the question is really, can these 62% levels hold?
And but the cloud is quite narrow. Can we
yes,
break it?
here we see also that indeed this cloud is very narrow. And the question is, if will it support a yes or no? When we look longer term on the weekly charts, we see also that there is a long-term support trend line which is rising since October, which is coming close to this 2025, 2015 area. And therefore, we expect the market to rebound here within that rising wedge. Also, we notice that VIX has already risen and reached a level about 17%, which was a place where it was a former resistance in the past. So it could be capped there.
Mm-hmm. And so this VIX index, is it already excessive?
Well, really not so excessive, but it has risen from the low part of the trading range, around 13%, toward now 17%. And here we see that we are close to the former high in mid-February, also around 16.75%. And also we are close to the upper Bollinger Bands. Momentum is already in overbought area, so we think here there is a good chance that the VIX could be capped.
And so looking to the emerging markets, does this have a negative impact? Or did I
Before we speak about the emerging market, let's just focus on what has happened on the long-term US yields.
Okay.
Because this can explain really a change of nature. And we see here that basically there was a big rebound from 1.65% to above 2% to 2.25%. And this has turned the momentum on a weekly basis, and it's expected to see interest rates on the 10-year basis move all the way up to 50% in coming weeks. So this has different impact on different markets, that's for sure. And also we can see it has some impact on the emerging market. Emerging market here is a global ETF here, including Latin America and Asia. And here we see that it was already underperforming the S&P 500 for the last 6 months. But in the last 2 weeks, of course, it has had some impact a little bit more globally on all emerging markets.
Has it also impacted the major favorites in India and China?
Well, differently. A little bit for China. We were back now to the support levels, but I think we can say that the main uptrend is not in danger. We're already corrected quite a lot on the oscillators. We're coming close to the oversold area. And on India, the impact has been relatively marginal. We're still within a nice uptrend. And even though the momentum is slowing down a little bit, we can see this small divergence here on the top part of the stochastic oscillators. Nevertheless, what is nice is to see that India is outperforming emerging market here on a relative strength. This orange line is rising nicely, and it's about the same behavior recently, a little pause versus the S&P. So it's still a favorite market.
Mm-hmm. And so what is the impact on Japan?
Well, there is almost no impact on Japan. That's amazing. We have a relatively strong rising relative strength of versus the S&P 500, and although we are close to the top of these long-term channels now over 2 years, the small pullback here is almost not visible. Mm-hmm. So we would say that despite the fact that yen is not really weakening a lot, the impact is relatively minimum on Japan.
So there are still seem places to hide in terms of diversification. Is this also the case for Europe?
Yes, yep. Japan is a place to hide, and probably Europe too. Let's look to see where we are long term, right? on Europe has been outperforming. It was lagging in the past with this long-term descending relative strength, which is now turning up in the last 2 months. And that has allowed the Euro stocks to break a long-term descending trend line at 3,500, and we are still above it. So with rising momentum also supporting it. So we are there in good shape.
Mm-hmm. So what is the key support area for Euro stocks to maintain the uptrend?
It's a little bit difficult to find out, but maybe if we look at the weekly charts, what we see is we had a little spike down and a close up last week, and this is called a swing low. And this swing low can around 35 about 35.15 can be seen as the key pivot levels. Above it, things are really fine. Below it, probably a little bit more corrective action. Why we say that? Because when we look at the daily charts, of course, during the last 10 days, there was some major, not major, but some divergences on the way down, similarly to what we had in February. But we see also that in February we were not able to break the support. So we are going along the same line and now banking on the fact that we are not going to break that support right now. We think, in fact, that also for the S&P that we saw at the beginning, we are very close to the end of this correction, lasting now 2 weeks.
Mm-hmm. Bruno Estier, thank you very much for being here today and sharing your expertise with us. Thank you.
You're welcome.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.